for the Fed to pause, right, in the September meeting. That's what we're going to go over. We got some good macroeconomic data. We're going to hit the technicals, do some Q&A at the end, and of course, make sure that's working. And of course, we're going to talk about, what is the market doing? How is the market responding versus this new, well, not new data, but versus the data we just saw that's for August, right? We're completing the month of August. It's the 31st, and we're going to dive in. But first, let's take a look at the charts. Okay, let's take a look at the charts first. We got S&P 500 trading sideways today, right? Pretty neutral. This was the opening. So this was the market open. This is my rectangle. So this is the pre-market, right? We got to 452, 453 in the pre-market. Highlighted that you see the yellows kind of faded, and basically traded sideways all day today. Okay, we're nearing the end of the day, and we've traded sideways. And what did we say yesterday, right? If you're keeping up with the Twitter, looking at PC data, this is what the Fed is focused on. The Fed is focused on the PCE data. That is their preferred measurement of inflation. Anything above 3.3% on the year over year would be push markets lower. Okay, this was my prediction anyway yesterday, right? Anything between 3 to 3.3%, neutral to bullish, okay, on the PC. Anything below, very bullish, right? So same thing for the core. Anything in between or in line with expectations should be pretty neutral. And that's what we got before we hit all the data. We got neutral numbers, right? We got within expectations, nothing too high, nothing too low. S&P trades pretty much sideways today versus yesterday's level, okay? And that's just based off how the market's been reacting. That's obviously my opinion, how I'm looking at it. But so far, hey, we've been pretty correct. Now let's dive into how, what is the other data that we saw? So first, let's start with consumer spending. Now this is interesting, right? You got to keep your eye on this. SPY was great, 452 short. Yep. This was interesting, right? So today we had consumer spending coming in slightly higher, right, than expected, slightly higher than expected, 0.1% higher. Okay, and what does that sort of signal? That, oh, consumers are actually spending, and this is for the month of July, right? This is backwards looking data. We look backwards. The coincident data in real time is a little different, but this is what the Fed's trying to gauge, right? What's going on with the actual economy at the end of the summer? Now, part of this, consumer spending being hotter than expected. Remember, the summer is usually the most demand, right? It's summertime, people spend the most. So this isn't a big surprise in, psychologically, this is not a big surprise, but it did beat expectations. So we know they're spending. We know consumers are spending, right? Consumer incomes, right? Consumer incomes actually missed by 1/10. So consumer incomes came in, or incomes are lower than expected, right? Actually lower than expected. And what is that? That's okay. That's interesting. So people are spending more, but their incomes are lower. All right. And then we jump over to the savings rate, and what do we see? Savings rate ticks lower. Okay. So just to put it in perspective, the U.S. consumers are saving less, right? They're saving less, they're making less, and they're spending more. Excuse me. So that doesn't look good for the back half of the year, right? That kind of looks like, okay, consumers are spending a little more than they should be possibly, right, given the data, and their incomes are lower than expected, and they're saving less. So maybe they're drawing from that savings to actually spend more. Now, if we look seasonally, this makes sense because you're at the end of the summer. Typically, people stop spending into the end of August, right? They stop spending kind of where we're at right now. And most of that spending happened in the summer, travel, leisure, whatever people wanted to get out. Now you're back to school. That's pretty much your last bunch. How would I say this? Your last piece of spending is going to be at the end, right? For coming back to school. So it does make sense, but it does also spell that the consumer should be or could be rolling over into the future, right? Could be rolling over to the future. And sort of the response from the bond market was lower. So that's good. And we're going to go over the bond market, but we definitely did go lower. Now, moving over to the Fed's preferred inflation gauge. Hopefully this isn't too hard to look at. You have, there's two things we're looking at here. PCE, right? Basically the year over year inflation gauge, and then core. You'll hear about core. Well, those were up, right? Month over month. Red was the previous month, blue is this month, or July. And those actually ticked up, but that was not a surprise. That's what the Fed was actually expecting, right? The Fed was expecting that, and came in as expected, nothing too terrible. But the warning sign or the red flags here, we go over to transportation services, big jump month over month, almost doubled, right? That almost doubled. But we do know that comes from oil prices, right? Oil prices were up 17.5%. Gasoline prices are up, and we know that's coming from there. So really, that's a volatile part of inflation. But if you look at, and now we go to financial services, that also almost doubled. Okay. So some people, I don't know exactly why that is, but some people are saying, oh, because the stocks were up so much in July that, Wall Street basically is being greedy, right? They're charging more because you had a big outsized return, plus they're getting more on their cash. Who knows what it is? Either way, financial services up, transportation costs or transportation services up also. All right. Now we go down to the month on month, and this was a different story, right? Looking at month on month, the data was, there was less of a change. Month on month there was no change. It didn't really change, right? So we're flat. If you look on the month on month data, which is more coincident or more, in the now, not looking backwards, you see that core and PC, the Fed's preferred inflation measurement, pretty much just stalled month over month. It pretty much just went sideways, right? So if you're an inflationist, you want that going higher. If you think inflation's coming higher. If you're neutral, hey, it came in pretty neutral, but there is no big upside move. And that's adding together all the summer spending, right? So as we near the, the seasonal high demand, right? Now we expect that to go lower. So core PC is actually, that's not bad, right? It's stalled. Okay, well, what do we expect it to go lower? Core goods are falling, right? And again, transportation, big move up for transportation. Month on month, financial services, big move up. But we don't see anything systemic for financial services to keep moving higher. We don't see anything systemic. And plus, transportation is going to be a bigger part of the economy than financial services here. Not everybody's using financial services, but transportation services are a big one, right? So is there anything that indicates that would be going higher? Actually, there is a red flag there. If we jump over, right, we're looking at the macro forces here. If we look over to energy, or the biggest commodity here, and I think this is a red flag for the market. For the most part, this is a red flag. And what's going to cause the Fed to stop hiking? Well, inflation coming lower. But when we see oil prices climbing like this, back to the highs, definitely not. So this is a caution. This is caution. We're back up to the highs. That tells me the next CPI report, right, ending August. So we were like, okay, it's under 81 for August. And then boom, now we can get rid of that because now inflation is chugging higher into the end of August, which tomorrow is. So unfortunately, CPI for September will be higher just because of that print. But, for the most part, I think core is coming down. So we're looking at those prices. They're definitely coming down. Now, take a step back, right? Actually, before we even get there, the US 30-year. So the US 30-year yield, right, it did fall today. So jumping over to how the market's pricing in the rate hikes, we had the market price in I guess the market it is pricing in a slightly higher chance of a hike, right? From 10% to 11.5%. So not a big change. I don't think this is a big change. I think the market is trying to digest the data. It's going to take a while, right? We still got jobs tomorrow. Also, psychologically, the way that the market typically moves is, okay, well, first we got those first couple days going to the 30-minute chart. Let's go to the 30-minute chart. So we first got the bottoming out last Friday after Jackson Hole. The market started pricing in better data points. We got above all these resistance levels, right? Better data points. And now that we're at the big days tomorrow, right? PC, we kind of knew it was going to happen. PC is at the end of the month, but we already saw in the inflation rate, which is a component to PC earlier in the month, show that it was going to tick up. So this is really lagging data, right? So the market bid higher, got rid of all the shorts, and now I think going into Friday, the market could be pricing in downside, right? Could be pricing in downside and saying, okay, what if these numbers are not as good as we thought? Let's, sell off in the morning, whatever it is, and then digest it over the weekend. I think next week we could see all-time highs if these jobs numbers come in in line or where I expect it to. So market chugging, is struggling. It's sideways. The numbers weren't great for inflation anyway. They weren't great. Consumer is weakening, right? But this also gives room for the Fed to pause here. This gives the Fed room to pause if the consumer keeps falling, starts to fall apart in the back half. Now, how do we track that? Well, you look at the data going forward, and we see that the market is pricing in a pause in September. Okay, let's go to November. You go to November, it's pricing in a pause also, 59% chance. That actually went up versus yesterday. So bigger chance of a pause versus yesterday. December, right? It's looking for a pause also in December versus the day before. We're looking at so the chances of a pause are actually going higher after looking at this data. Not of holding rates, not cutting. We're not talking about cutting rates yet, right? I don't know if that's going to happen given the fiscal stimulus coming in the fourth quarter. We don't know if that's going to happen. So getting back, right, to the data, or getting back to how the market responded to this data, 30-year yields came off. Look at this. Check this out. This is very optimistic for longer duration assets. The bond market is now catching a bid. Okay, we see the bond market catching a bid here as we see. And I think the story here really is consumers are weakening. We just saw that, right? They're spending more than their incomes. Well, do the math. They're not going to be able to keep that up, right? They're not going to be able to keep that up. And then you look at the savings rate, that's also ticking lower. They're not going to be able to keep that up. So what that signals is the consumer, which has driven GDP higher, the consumer is starting to weaken. So now the bond market is responding by saying, okay, we see second half weakness, let's buy bonds, or let's increase the demand for protection against a recession. That's what the US Treasury market does. The bond market is, as bonds go up, you're increasing your protection against a recession, right? It doesn't mean you're going to get the recession, but the market is reacting in that way. And when we look at 30-year yields, they're coming off, right? 30-year yields are coming off. And I think, right, looking at this, taking a look at the confluence between 30-year yields, I guess it's kind of hard to see if the 30-year rate, right? 30-year yields are rates for the stock market, for NASDAQ. You see NASDAQ is moving up faster than the S&P. If yields break lower, we could see the second half to the bull market for tech stocks. Now, what do I mean by that? Why? Well, if long rates break lower off a softening economy, then what you're getting is actually yields, right? You're getting rates come down, which are factors into valuations for the stock market, right? The higher risk assets anyway. So if the consumer slows, that actually is, I think, bullish for risk assets. That might be actually bullish for risk assets. Why? Because rates come lower. As rates come lower, your valuations start to improve. The interest on those earnings come down. So the tricky part is, well, what about earnings? Do earnings actually stay up? Can you actually get earnings, stick around? If we look at yesterday, we talked about this. There was a couple charts here on my Twitter. Oh, come on, Twitter, load up. Yesterday, basically, we were looking at a couple charts that were showing that growth is, or not growth, but earnings estimates were actually picking up, right? So we see, and this was into the deceleration, but earnings estimates are starting to pick up. Come on, Twitter, this thing is lagging on us. Let's back up a little bit. Okay, there we go. So earnings estimates are picking up, right? Does this continue? Who knows? But I think it does, especially for the big tech stocks, right? Apple, Amazon, Google, Facebook, Netflix. There's other ones too. We saw Salesforce. We saw a cybersecurity report. CrowdStrike doubled or beat their EPS by 100%. And the reason I think that tech starts to take the lead again, starts to lead the market higher, is simply because they can manage their costs and increase their margins a lot better than the value stocks. Okay, they can increase their earnings versus value stocks. So you're getting margins. You're getting this tech stocks hold on to margins, right? Are able to retain their earnings, and at the same time, they're not only just retaining their earnings, but bond yields or the rate of interest is coming down, so their valuations go up. So I think tech actually starts to outperform here. Let's look at the defensive stocks really quick. If you're unfamiliar with that, you go to the S&P defensives, which is going to be XLP. No, that's state. Yeah, XLP. Did they catch a bid today, right? After this consumer data? Not really. What about discretionary, which is going to be higher spend or goods? Discretionary went up because part of that report showed that consumers actually started spending a little more on goods, right? So the consumer is maybe starting to slow in services, and we don't really know that. The data's not fully out yet. Either way, a lot of these consumer discretionary stocks or sector of the economy wants lower rates. I'm telling you right now, lower rates are fueling tech stocks or Nasdaq or riskier assets, right? It's fueling riskier assets with the headwind being the dollar not falling. Even though yields are falling, now the dollar shows some strength. Where's that coming from? Where's the strength coming from? I don't know, right? We don't know. Could be risk, could be some risk. I mean, it's just one day, but typically you want the dollar does decline in this cycle, anyways, when yields start to decline, right? So we'll keep track of that. I still think the dollar goes lower, but we'll keep track of that. Either way, bonds are getting bid up, the dollar's coming down. So next segment, right? Why can growth continue? Hey, what up, Slime Z? What up, Asan? How you guys doing today? What are you guys looking at? What are your thoughts? What are your comments? What are your questions going forward? Looking at the market, Tesla, right? What is it? Tesla looks pretty nice right now. And there's also a new, I got to go through this research for the Swift network and Chainlink, a couple of that data in. But anyways, getting back to the macro, right? Oh, sorry. Getting back to the macro here. We got to keep in mind this. This data actually signals for the Fed to slow down because the consumer is going to be weakening. And most of GDP, the GDP forecast, right? And I think here it is, GDP forecasts have been going higher. The Atlanta Fed GDP now they revised it a little lower. And a lot of that growth was coming from, I know I posted this earlier, a lot of that growth was coming from consumer spending. So if consumer spending comes down, then you're getting inflation expectations come down at the same time. I guess Twitter can't pull it up there. Inflation expectations come down also, right? Unless oil breaks out. That is the big risk today, is that oil continues to break out, right? So that is a big risk today. But I want to also, turn us over to the global economy. The global economy is showing strength, right? So right here, India. Okay, India just came out with their GDP year over year. It's at 7.8%. And what this is a global force to an economic expansion. So yes, there might be some weakness in consumers, but when you look at the multinationals, when you look at the big tech, and I signaled this earlier in the year, which is, and if you're making comments on TikTok and then you lose them, just jump. I'd appreciate if you guys jump over to YouTube. I can see your comments; they stay there, right? They don't get lost in the TikTok feed, which kind of sucks. So anyways, your comments basically pinned on there. And also, yeah, go like and subscribe if you guys haven't already. I'd appreciate it. What up, DeFresh? Haven't seen you for a while. Hope everything's going well. So India, right? India is set to be one of the biggest economies. You've seen a lot of technology come. I mean, I don't know if you've seen it, but they're set to be good. They have they're growing at a fast rate. They're the biggest population on the planet now, right? They've passed China. GDP is going up. They have no debt. They have the least amount of debt of the top 10 economies, the least amount of debt, almost zero. And the average age is like 32, 34. So their average age versus the US, right? We have a lot of boomers, a lot older age. So their productivity is picking up. So what is this? This is a bid for the global economic system, not just, oh, the US consumer might be slowing down. Okay, yeah, sure. So that puts the Fed on pause a little bit. That might put the Fed on pause a little bit. Inflation's not going higher, right? It's just stickier in some areas, which is really kind of false because rent is coming down. So that's just lagging. Either way, India, right? Pushing that up. Well, who's going to benefit from India? Multinational big tech companies, Amazon, Apple, Google, Facebook, Tesla, Meta, right? Especially Tesla talking with the Indian, the business, well, who is it? I know Elon is talking about putting a factory in India, but the problem with India right now is that most people don't actually drive cars. They drive like scooters. They drive electric scooters. So, that's interesting how that'll fit in there. Either way, that's a bit in global economic expansion, right? The global economic system is actually starting to ramp back up. All right. Moving forward, Japan, third largest economy in the world, right? Their retail sales are starting to pick up. So their growth is also picking up, right? And Japan doesn't care about rate hikes. Japan has the lowest rates. It's hard for them to actually create inflation. So they keep printing. Their money supply keeps going up. And I will keep up the charts so you guys can see that. But this is why I'm very bullish on big tech. Also, not only that if the consumer slows in the US, well, bond yields come down, increases valuations, but also you got global growth picking up, which, hey, most investors in the globe, they want US equities because US equity market is the most liquid and we have the best companies in the US regardless, right? So this bid for growth should keep money supply going up. It should keep the global economy from going into recession and a tailwind for an expansion in general, right? Okay, we just got Chinese numbers. Now, this is a false narrative right now, okay? Everybody's thinking that China is falling apart. Hold on, let me take a drink. So everybody thinks China is falling apart. China's going to collapse, blah, blah, blah. No, they're not. China got close to collapsing when they had the shutdown, right? The shutdown is over, right? The pandemic shutdown, which ended, I believe, October of 2022 is over. They started printing money. They started increasing money supply. Central banks started, pushing. They cut some rates, whatever it was, and their economy recovered. They recovered back in a positive territory. Here in the red is the services side of the economy. In blue is the, I know it's hard to see. In blue, you have the manufacturing. So we got that big impulse from China, and that was a signal back in October. The bottom of the market was October. CPI peaked. Well, it was already peaked. You got a good inflation print. Global liquidity started to pick up. And then a lot of that came from China. And I think we're about to see that again. That's why we go to all-time highs here. But getting back to it, the Chinese economy, right? Oh, it's going to collapse because yes, real estate, right? Property is a third of their economy. And their property market sucks. But they are stimulating. They are cutting rates. They are easing housing requirements or mortgage requirements. They're easing their economy. They're easing their markets. They're trying to get incentive back into the market there. So we see China, their PMI for manufacturing is actually turning back up. Their services, although, came down. So they met expectations. As a matter of fact, they exceeded expectations when it came to their leading economic indicators, although they're still in recessionary territory. They're recovering, okay? They are recovering, and I expect China to keep easing. They're at the beginning of the easing cycle. There's not going to be more pain for China. If anything, they're gonna take care of that pain. They're nipping it in the butt, and that creates more global liquidity. So the global economic outlook looks pretty good. Now, again, looking at this is one chart from Cross Border Capitals. He does a lot of liquidity stuff. The Chinese economic momentum momentum indicator, basically looking at the momentum from their injections, is starting to pick up. So their GDP should be going higher here. And remember, the thing about China, they don't have inflation. Their inflation, they're at risk of deflation, which is why they can cut rates, which is why they can print money, which is why they continue to ease policy and lead the global economy in easing. Brazil's doing it too. Their inflation was like -14. So you're getting an impulse here, right? You are getting a big impulse. And that kind of brings me to the next chart here. Check this out. So I always talk about liquidity sometimes, right? Global liquidity, and I try to track it in ways that make sense. And here you basically have, you have a lot of liquidity factors. First, you got in red, see this red line, this is the most lagging one. This is the 4 major central banks, okay? The ECB, European Central Bank, the Fed, the Public Bank of China, and Japanese Central Bank, right? The JOB. So those, when you look at the money supply, it's been moving higher. This is from very repressed levels, from the lowest levels actually that we've seen in the last like 20 years. So that is going higher. I expect it to keep going up because China is now stimulating and Japan is now stimulating. Brazil is not part of it, but Brazil's stimulating. So that's even other forces on the other side. Amazon will do awesome. I think it's being held down. I'll get to that one. Yes, we can. And so that's red, right? Now in orange and blue are the assets. This is S&P and this is Bitcoin, right? This is Bitcoin as a liquidity asset or as the more risky asset, of course. Now there's 2 black lines here. One of them is the U.S. Federal Reserve deposit requirements or reserves by banks. And what this really means is as this goes higher, this sharp one that's moving, as this moves up, right? Basically, liquidity, banks have more loan liquidity. That's what that means. So the more this goes up, the more reserves that banks actually collect, right? The more that these are a lot of these banks, like, Morgan Stanley, Goldman Sachs, they have market makers. They're the ones making the markets, the capital markets. So if they have more reserves, whether it's treasuries or cash, then they can now loan out more money or take more risk into the market. Now, do I know that for a fact? No, I do not, but I'm tracking the data. You can literally see, look at, oh, okay, that didn't make sense. That didn't work there. You can literally see from the bottom of liquidity, when liquidity bottomed in January here, the market's only been going higher. So this is a tailwind for the market when you get liquidity. Now, the other black line right here, which we talked about yesterday, is the actual money at the Fed that's leaving the Fed and coming into the market. And I'm going to keep our eye on this, because you can see as it pushed up, right, as you got that little push higher, which was after Jackson Hole, by the way. So after the Fed spoke at Jackson Hole, all of a sudden liquidity increases. I wonder why that is. Because the Fed is signaling it's a little more dovish than people actually believe. People are like, oh, the Fed's super hawkish. Yes, the comments are, but relative to the past, relative to what we've been hearing the last Jackson Hole in the last couple of meetings, he's becoming more dovish. And there's literally AI systems. There's a lot of charts that are tracking his language, and he's becoming more dovish, right? They're getting closer to the pause. So that liquidity turned up from the money market funds, I like to say, or leaving the Fed, coming into markets, whether it's to support U.S. treasuries. And the more treasury support, the more bond support in the U.S., the lower the rates come, the lower those bond yields come. So that liquidity turned up. Bitcoin happened to turn up. Now, this isn't a perfect correlation. Most of Bitcoin's turn up came from obviously the ETF news, right? That Grayscale is getting close to passing an ETF, or that the judge settled in favor of them. But if you look at the S&P, that's where we bottomed, where we sort of bottomed after Jackson Hole, when this liquidity also came in. So that's just the liquidity factor also to look at versus the global economy. All right. Now let's get back to the, I think we're on this one. Yeah, here we are. Let's get back to this. So yeah, that's what we're looking at. I'm gonna go back to the actual technicals. We can go through a couple comments if you guys want. Here we go, Hassan. What's up? What do you guys want to hear? What do you guys want to listen to? I appreciate it. Oh, excuse me. I appreciate it, big man. Amazon will do awesome. I think it's being held down. Get in while you can. Okay, yeah, we'll look at Amazon there. See if I missed anything else. Excuse me, man. I'm just trying to drink the salt to stay hydrated. So where would you add Roku? So that's a good one. So let's do Roku and Amazon. We'll do Roku and Amazon. Take a look at Roku, take a look at Amazon. And hey, one other thing I wanted to mention really quick. Look at the VIX, right? Following all these reports, regardless of the volatility, the VIX is selling off. And that tells me investors are getting more confident that the equity market is here to stay, right? Or that that equities in general, or that risk in general, is more attractive. So VIX selling off, right? Going back down, more attractive. We go to NASDAQ VIX almost at new lows. So this was the last signal. You guys remember, some of you guys that were with me before, when the VIX started making new lows, I was like, hey, is this not the signal for a squeeze higher, and a squeeze higher? And that's what we got. So this consolidation, yes, and Amazon, probably Roku. And Roku, I'm not 100% sure, just because they're not profitable yet. So higher rates could hurt them. If rates come down, Roku's going up, right? But for the equity market in general and NASDAQ, this volatility coming down is a huge bull market signal. We're getting a bottoming, right? The market is making higher lows. It doesn't go straight up. It pulled back after this report, because the market is looking tomorrow and saying, okay, let's price in, or let's not try to price in better numbers. Let's wait and see, and we'll go over those numbers to see what they actually are, right? So those are the S&P, or those are the technicals. Oil, big risk here, right? But let's watch. Let's see if oil actually can get above. What's that volume look like? Oh, that's a lot of volume. Oil does look bullish here. If it gets above 83.50 as usual, right? I'm going to be concerned. I'm definitely going to be concerned. But it's got rejected for the past 7 months, I believe, or even longer than 7 months. It's been rejected at this level multiple times. So this just could be a technical trade back to the highs and come back down. Who knows, right? We'll see. If it gets above it, though, we'll revisit the technicals. We'll revisit the thesis and see if it's still in place. Dollar moving up also today anyways, not great. But it's if it makes a higher low, great. It's going to roll over. I think it does continue to roll over. And maybe there is a scenario where the dollar actually goes higher with risk assets, right? Where you get bonds higher, you get dollar higher, dollar strengthening, and you have yield strengthening, I think it's a lower probability, but it is possible. I think it's a lower probability, but it is possible because if you get into the bond market, right, if the bond market goes up because inflation's down, because consumers are weakening, well, that's going to lower valuation for stocks, and the stocks who actually can retain their margins go higher. They have lower rates. Risk assets like crypto are definitely going to go higher with lower rates. And you also have now market liquidity can turn up because inflation is basically not an issue, not a threat. And as the economy slows, just like China, we can start cutting rates, or we can start easing in some way or another. Plus, in the fourth quarter, guys, this is why rates could actually stay higher in the fourth quarter. You get the Inflation Reduction Act, bullish for Tesla, and you get the CHIPS Act, bullish for Nvidia and more chip makers. So still a lot of bulls here. Anyways, let's turn to Roku really quick, and then we'll get to S&P technicals. I'll get to that too. Okay. So technicals for Roku, right? First of all, Roku's on the uptrend. Okay, it's been on an uptrend. Let's go to the weekly chart really quick. It's been on an uptrend. It's broken out of that big range. So we got the break and retest, broke above 75, got all the way up to 100 where that prior resistance was, came back and retested 75, held a couple days, breaking, it's actually breaking. Well, this is a weekly. Let's look at the daily. It is breaking above the previous candle. So this, to me, would be a nice entry. The best entry probably would have been the multiple holds against that 75 level. But you're still getting holds on this, 80 level. Now, to dive in, to go in a little deeper, let's go to the 30-minute chart. I'm looking for an entry. I know you said an entry, right? Where would you add to your position here? Okay. So, and just FYI, I'm not in Roku. I got stopped out a long time ago. I would be in Roku, but I could actually take a look at this. I'm trying to wait and see. I want to wait till the numbers come out tomorrow, and I want to see one more pullback in the market because I'm looking at Tesla's catalysts. They look pretty good. But Roku, where would I get long Roku, right? How would I see Roku here? I would be looking at clear support here at 77, right? Very clear support here at 77, 78. And then Roku, you want to take a look at NASDAQ. Is it in the NASDAQ index? I don't know. It's probably not, but it is a riskier type of asset. So I would wait a little longer before I got long Roku. This thing can burst higher, but if you look, it typically bursts higher off of a big sell-off. So this is just, knowing the stock. You see big stock movement. Yes, this was earnings, but it typically goes higher, right? Look right here, back here. You had Roku sell off pretty deep. That's where you want to catch Roku, on a very sharp sell off, because it moves so fast. Not really on an uptrend. You can do the uptrend, but you better have a longer out contract or ready to hold those shares. I'd rather get in when it's really declining, but the overall market is still up, right? When it's declining in the trend, the overall trend is still higher. So every time you get when the Roku sells off sharply in the uptrend, that's where the better entry point is. So I would say wait for it to, and it is bottoming, so there's a lot of support. Wait for it to have a sharp pullback. Look, if these last two times you would have got in this sharp pullback, you'd still be in at 79. This sharp pullback, which was Tuesday, 75, right? This day, 75.15. So Roku, make sure I'm not zoomed in there. I would wait for sharp pullback and a hold between 75 and 80, right? Anywhere in that zone. If it gets below 75, nope, not in it, right? If it's holding 80, following a sharp pullback, then that's a possible entry, given that the S&P is still going higher, given that the macro and the technicals are still in line, right? Given that oil is not breaking above 83.50, which might not even matter, to be honest with you. It might not. I just think it's a big risk to CPI, right? I think it's a big CPI risk for the overall market. So that's what I'd say when it comes to that. For the short term, I don't like SPY's price action today. It's tricky. Oh, let me throw that on there. So yeah, that's my answer to you, Hassan. And Slime Z, what are you looking at? Tesla calls. So this is carbides. For the for the short term, I'm gonna put this on the full screen really quick. For the short term, I don't like SPY's price action today. It's tricky because it doesn't show a strong upward consolidation. I think people are nervous because for S&P, the S&P is kind of priced in better data. I still think it's going to bottom out here because it's holding above the big resistance, but it has priced in better data than we've got. Like the big data comes in tomorrow, right? Average hourly earnings, which I think aren't going to be that great. We're seeing that consumers are spending more, not actually their incomes aren't necessarily going up. So I think the data is going to be very bullish. I would say if you're swing trading, you're in luck here. If we hold 150, we're holding the prior day, we're trying to hold the prior day high, right? Over here at what is this, 451-ish? I'd say still say 450. And if we drag that anchored VWAP where the volume really came in, so checking the volume, right? If we drag anchor VWAP where the volume really came in, I would say on was this Tuesday? We had that big move on Tuesday. We're still holding anchored VWAP. Let's see, maybe the resistance or the support, yeah, 448. Maybe you're right, Carbides. There's not a real clear entry here. Maybe you're looking for SPY to break, but you're probably day trading anyway, right? So for you, it's going to be a little different look at that. You're going to be looking at that a little different. Hey, this could have been the bottom this morning or today, although we're at the end of the day. So it's not really, clear that like the move probably won't happen till tomorrow. I'm thinking tomorrow the market sells off into the numbers and then rebounds because I think the numbers are going to come in good. What do we have tomorrow? We'll go into that. Let me make sure I'm not missing anything. The daily candle might close with a very small body, almost a perfect doji. Oh, okay. So you're looking at that reversal doji. I'm thinking that's what you're pointing out here, a reversal. Oh, okay, yeah, a sideways doji, yeah. And we're coming from a big bounce. So, hey, look, what's very possible is that we do sell off tomorrow, even if the numbers are good. We sell off back into the support, right? Remember, I've been saying this. I'm looking for SPY to come back to 444. I messed this up to about 444. So we could sell off into 444. That is a reversal candle, and that's where once you get that support, that's more confirmation. We're going higher from here, right? That's what I would say. I'm still waiting. That's why I'm not looking at Roku. I'm waiting for the sharp pullback off of really good data. I want to see good data and then a sharp pullback. I'm like, oh, this is basically okay. Let's load up. And the data is good. I think, people are still stuck in cash. They're getting FOMO again because like, oh shoot, we didn't fall through the roof. So maybe we're going higher from here. Let me make sure I didn't miss anything. I'll go to Amazon in a second. And then, hey, I appreciate it, big man. And all of you guys that are supporting, I do appreciate you guys liking the live. I think you're spot on about the liquidity grab on tomorrow's market. Yeah, I think it's what it looks like, right? We're kind of slowing down. We moved up really quick following Jackson Hole. And I think we're going to sell off first. And, oh, man, take a look at Amazon. Amazon looks really good. I think Amazon has a lot of support. Amazon has a lot of support, and Amazon's really been suppressed for a while, given how much AI they have and how much demand they have on the retailer. I think a lot of the weakness too is their growth peaked for the retail business. Amazon AWS has not peaked yet. It slowed down a little bit, and but they're still a great company, right? The question is, what are they gonna do? What is their new product? What else can they do? Either way, their revenue is going to be pretty solid. And, Jeff Bezos isn't there anymore. So people are questioning maybe the leadership on Amazon. There's not a whole lot of FOMO, but they have a lot of AI. I think they're going to be messing with crypto also going forward with wallets. They're going to try some stuff, and we'll see how that actually turns out for them. I just think it's indecision. Anything can happen. I day trade, so I have the benefit of looking at it in any direction. Yeah, you're right. You're right. And also for SPY, so yeah, Amazon does look good. Also for SPY, I don't know what that is. Liquidity graph. Also for SPY, that could be a good short. Did we fill any gaps? I gotta pull up the other. I'm gonna pull up the other one to check that out. But before we get there, we'll look at SPY gaps. What we might look like tomorrow, right? How's it gonna sell off? I do kind of want to finish off on sort of the risks here. Go through this rather quickly. And when I say the risks, I'm talking about sort of the macro forces, right? This is the easiest thing to look at. What are rates doing, right? Keep your eye on this. Rates are coming lower. This has been damaging the market. We had that breakout at the all-time high, got rejected, came back down. Rates are coming lower. 5-year, 10-year, 30-year coming back down. So if this continues, well, any pullback in the S&P while rates are falling is not a bad thing, okay? Because there is no big recession risk. It is literally a pullback. You have a lot of fiscal in the fourth quarter. The market's going to have to price that in. Earnings are being revised higher. Okay, so keep that in mind. Bond yields, bonds are starting to bid up again. And what this means is the more bonds, the higher collateral, right? So as bonds go up, guess what else comes down? Bond volatility. Because, and where's that bond volatility at? Bond volatility comes up because the collateral is now moving back up, which means you can lend more if you own treasuries. Not only can you lend more, but your collateral is not at risk. And look at the MOVE index, right? The MOVE index is basically volatility, or the VIX for the bond market, right? That's coming down because bonds are getting bid up again. And we saw this bullish divergence earlier a couple of weeks ago. It's moving up. Maybe it gets stuck again here, but there's a lot of inflows, especially after a day like today where we see the savings rates coming down. Consumer spending is up too much versus their incomes, okay? Dollar, big risk there is the dollar getting back above 104, making a new high. Could just get stuffed right here. Oil, big risk, right? Above 83.50. There could be a squeeze if it keeps going higher. I don't like that. That's probably the biggest risk off for me. Doesn't mean I go risk off right away. I want to see, can it hold above 83.50? Not just to break above it, but if it holds and consolidates, then I'm worried, right? But it does push out the big CPI fall. The big CPI fall to like 2.5%. That pushes that further out because it's just too high. We wanted it to break lower. It didn't happen. But look at other commodities. Nat gas, yeah, it's getting a bid, but it's still pretty suppressed. Copper, still pretty suppressed, ain't going nowhere. Wheat, right, still making new lows. So no, look at the put to call ratio, which got very high and was very bullish because there's so many puts in the market. You got to put a line on this. It's now falling. It's not making new highs. So as this falls, this could be the return of the bull market. I don't want to say the return, but the second leg. If it does hold higher, then I'm a little worried if it holds higher, but the bears need a reason, right, to get bearish. You need a reason for all those puts to come back in. The VIX, very suppressed. That's risk on. It tells you something in the pipeline is looking good here. What else we got? Triple B spreads, which is basically equity credit risk. Are we seeing it? Nope. Moving sideways. There's not really any equity credit risk here, right? If anything, people are diving into equities. We're getting bullish price action for the equity market. Same thing with junk bonds. They almost slipped, right? This is basically high fixed income, right? Fixed income debt for the equity market. This is equity market debt or stock market debt, fixed income. We thought it collapsed and it didn't. It's still up, right? So that's doing pretty well. Yes, the yield curve was inverting. It's going back. Like, the yield curve is so misunderstood. What you want is rates to come down ultimately, but you want you want short end rates to come down faster. So that's a whole talk for another time. But I think those rates are the short end rates may come down faster than long end. It really depends on that money market fund money, right? Also, the government is going to have to pass another bill pretty soon here to keep printing money. They're going to do it. They're going to have to keep printing money. I think that's another bid for earnings, but also it could make rates go back up to the highs. So we're going to keep our eye on that unless that money market fund liquidity at the Fed steps in and gobbles up all the treasuries and pushes rates lower, right? That would be the ultimate bull case. Looking at the Dow. Dow broke above, holding support. I think the market just needs to come back and hold support. IWM. Small caps look kind of wonky. Not really interested. I want to see more consolidation there. Equal weight looks good, bouncing, trying to hold. I think we pull back. I think the market looks like it wants to pull back a little bit going into those jobs numbers. Now tech, right? Tech is getting back. This is NASDAQ 100. This is the big index. And this trend higher was once you hold above this line, that's kind of the momentum trend. Remember, we broke down from the momentum trend early August. Everybody thought, okay, this is it. We're going back into a bull market, but we're still on trend. You can see clearly we're still trending higher. What's it going to take for us to get back above that trend and hold? Well, it's probably going to take a better than expected earnings outlook. It's going to take CPI to come in. And look at headline CPI. Looks like it's not going to budge because of those oil prices, but the the core side, the core PCE, I think that goes lower. That's going to fuel the second leg. That's going to be one of the big components that fuels the second leg bull market, is that shelter prices start to come down. Maybe not in housing for single family homes, but rent prices are collapsing, right? That's going to drag down CPI. Plus, consumers aren't spending as much. Well, they are, but they're weakening. And well, this was backwards looking data. I think they're not going to be spending very much. They're going to slow down. There's a lot of segments and retailers and earnings reports that suggest that consumer spending is coming down. So that core piece will come down. NASDAQ gets back into the momentum trend. Crypto, it's all about crypto is literally all about this ETF. When is it going to get passed? When it does, I mean, hey, if you're stacking sats or you're stacking crypto, you're going to be rewarded. Before we're not even, this is the longest bear market in Bitcoin's history, and this might be the first year. I think the chances or the probability of an ETF being passed in 2023 jumped to 95% the other day. It was at 75%, jumped to 95%, and so that's pretty much good news. And I'm gonna get to your comments, Carbides, when I get through this. ETH to BTC. So yeah, that's crypto. Chainlink. There's some news on Chainlink. I'm gonna quickly look at it a little later in the stream, but I need to go through it a little bit to see, okay, how bullish. I'm very bullish on Chainlink. I think it outperforms Bitcoin and Ethereum. Okay, Palantir got that upgrade, then they got a downgrade. Tesla in the trend, right? We said, hey, it's pulling into this trend. Tesla's going higher. Yep, Tesla looks great. The price action of Tesla right now, extremely bullish. When I see, if there's any price I know, right? If there's any asset that I recognize bullish price action, it is Tesla, right? And if you guys have followed me for a while, I always call out the bottom of Tesla. Not exactly, but you know, back here I had a video, oversold, bounce, we go higher, right? Again, here I traded this up. This is when I was trading, but it was, you know, what am I going to do? I was trading. I was doing a lot of trading content. We traded Tesla all the way to the highs pretty much. And then earnings, we got crushed, right? Got crushed on earnings. We got oversold again. Boom. So the price action on Tesla looks very poised to go higher. This is a very risk MicroStrategy calls, right? If you think that Bitcoin ETF, I wouldn't take it. I keep thinking about it. I'm not going to take it. Who knows what's going to happen to MicroStrategy going forward. So we won't go through all the other parameters. ENPH might have a bounce here. Actually, what does it look like? ENPH. Oh yeah, Zoom also, ENPH. Zoom had something came out for Zoom. This is what I want to see for ENPH. I want to see that RSI stick down there a little longer. And this thing's going to have a rebound in phase. In phase, I don't know what the call options look like, but if you go 6 months to a year out, especially that Inflation Reduction Act money coming in, could be a nice trade back to like 200, who knows, right? So let me jump onto the trading, to more so of the trading. Oh, I didn't even sign in yet. Hold on. Go back to the trading software. Let's jump onto this trading software and do some TA. All right, so what did you say, Carbides? NVIDIA is showing some weakness. In my opinion, the long-term uptrend after 2 earnings ago has been a major resistance. Yeah, it has. And it's tough with stuff like NVIDIA because, remember, everybody said NVIDIA, I don't know if it was you, when we're on TikTok, said NVIDIA is going to break down. It never broke down below 370. I just think one thing that people underestimate when it comes to positioning and sentiment, your technicals don't matter as much. I'm a technical guy, but technicals, you got to know when technicals aren't that much of a weight versus sentiment and positioning and FOMO. There is so much FOMO in the AI narrative. You're getting more volume coming in to NVIDIA than there was before. After they, you know, gapped up like crazy, you're getting more and more volume come in because people have FOMO and shorts keep getting squeezed. Are you going to short NVIDIA? Are you crazy? It's just one of those stocks like Tesla where it just keeps going higher and you hate it because when you try to get in, it sells off and then you get scared. Oh, it's going back down finally. And then it keeps going higher. So I'd say for NVIDIA, you look for a sharp pullback. Shorting NVIDIA is really tough unless you're a really good trader, right? Maybe you can short again at 501, but the only way you're shorting NVIDIA is if the overall market starts to roll over, right? That's the only way is in my opinion, the overall market starts to really roll over. And then, yeah, that's it. Cause NVIDIA, it's just tough. Look, it started breaking down and it just bid right back up. The earnings power is so strong. And if rates come down, boom, NVIDIA valuations go up even higher than they are right now. I'm not going long NVIDIA. I have to see a good setup. I don't really like that stock. I don't like how it moves, but that's just my opinion, right? Jumping over, I'd like to see I'd like to see us cross above it and sustain it before be a big move once we do, or a big drop. Okay. So you're looking at that long-term trend. Okay. The long-term trend, probably the upside trend for Nvidia. Yeah, Nvidia needs another really pullback. Needs another sharp pullback, but it is gliding on that uptrend, right? It's just gliding on the uptrend. See, and this was your spot. This oversold for me. I guess you can't see it there, but for me, the oversold is the biggest signal on these super big momentum plays. You want to see that oversold. Look, you get oversold. Look at the last time Nvidia was oversold. That was the bottom. Okay, every single time you're oversold, and this one was a little trickier because the overall market was weak and there was no macro support. Boom, goes higher. So this last Nvidia sell-off was the time to buy it as it approached that oversold. Am I saying that right? Yeah, oversold territory. Exactly, right? So on a swing trade, if you're day trading it, hey, that's totally different talk there, totally different skill. Swing trading and day trading, not even the same. Totally different skills. So yeah, you're looking for that big level, and 500 looks to be that big level if you're going to short again. It could consolidate for a while. You could keep shorting on 500. Just don't do it while the overall market is up. What else did you say? Tesla 258 is 50% of November 2021 all-time highs and January 2020. Okay, so he's looking for that bottom there on Tesla. Yep, looking for the bottom there. And remember, everybody said Tesla's going back to, actually, some people were right, 215. They were right. It came back to about 215. I thought it would be stalled at 235, 240, and we went even lower, but that was even more juicy there. Now Tesla is starting to break that downtrend and wedge higher, a wedge in the short term. Anyway, so that's what we're looking at there for Tesla. Okay, now I'm gonna do some TA on. Oh, I got my stuff open, so let's jump over to that to look at the overall market. What we're looking at for tomorrow. And if you just jumped on and you want to hear the macro report, it's on YouTube. Everything's on YouTube. Go subscribe too. If you guys want to help me out, I'd appreciate it. It would help me out a lot as a follower. If you guys go subscribe to the YouTube, trying to get that channel up, and also hit the likes on YouTube, get me into the algorithm a little more. I would appreciate it. All right, so we are looking at, let's move this over a little bit. All right. So this is Tesla, but let's go over to S&P. All right, so there's that big sell-off at the end of the day. Yeah, I think the market's going to sell off into tomorrow's report. If the report comes out really good, I think the market can bid higher. But if it's just normal, I think we still sell off into Monday possibly. And we'll look at the data coming in on Monday. But the market moved up pretty quickly here. So S&P, what I want to do first when I do this TA is remove the gaps, right? I want to remove the pre-market, get that noise out of the way. And it looks here like, can we take this further to the outside? Okay, there we go. So it looks like this support is where we might come back into 444 to 443. You could even call it 445. You have a gap that got filled at 448. Oops. And you got a gap at 448. And then you have, but is that a strong support? Possibly. Or we dip lower to 444. I am still waiting for that 444 dip. I think it'll come at some point. Not to trade, but as a proxy for whatever else I'm looking at. Because once you come in there and you start supporting, okay, now I'm looking for that swing trade, right? Juicy swing trade from Tesla or whoever it is. Oh, Zoom, that was on my mind too. So that's S&P right now. You can see a little bit of head and shoulders right in the short term, and this big move up might just reverse right back down until we get a little more confirmation that the Fed is going to pause here. But dang, that dang oil price moving up is a big negative. So keep that in mind, right? So yeah, any gaps to fill here on S&P? I mean, that next gap for the S&P is 456. Whew, that would be pretty explosive if we jump to 446 on a goods earnings report. I want to say I doubt it. The probability is low. I think it's higher that we consolidate here. Let's turn that blue. Or green, whatever. So that's SPY. QQQ. Technology. Tech might just keep grinding up with these rates coming down. 382. Yeah, SPY is, man, SPY. I mean, Qs are on fire. The Qs have been on fire. When it makes these type of moves, this is bearish divergence, by the way, too. That's why I'm like, I think we might break down here. This doesn't look like a great pattern. You need super good news, but I don't see that happening. So yeah, this is kind of bearish here. It does look like a trend, but there's not big enough pullbacks for it to be trending yet. I think a lot of this too is that earnings estimates are starting to go up, but you do want those rates to come down. You want to see the jobs report tomorrow. So that looks like that gap. We have 382. Take a look at Zoom here. So what pushed Zoom up this afternoon? And then while I take a look at that, I'm going to move over to, not move over, but I want to see that article. What was that article? Oh, okay, I got it up here somewhere. On the Swift network. Oh, there it is. All right, so what happened here with Zoom? Hey, because if there's a, I said as a joke the other day, if the pandemic hits, if we get another, because I know there's some talk out there that there's another strain. I don't think so. Have to be some surprise. Well, Zoom stock was, outperforms pretty well. It was one of the only stocks that outperformed during the pandemic. Fit in right in with the narrative. Yeah, the RSI on 15-minute SPY chart also looks strange. Rising prices with falling RSI. Yeah, that's bearish. I think we're going to sell off into tomorrow morning and possibly all day tomorrow. But I don't take that as a negative. I actually take that as a positive because a lot of the big buyers are going to eventually get, they're going to lick their chops and try to buy that. We're still in the uptrend. A lot of good, a lot of good stuff coming online. So for sure. But anyway, Zoom, what pushed Zoom higher today? I guess it's not up there. Who knows? Could have been just a short squeeze above that 69 level. I'm going to pull it up on another feed, see if we can figure out why Zoom moved up. I think it was midday too, was it? Was it midday? Let's check that. I mean, it could just be a squeeze. Looks like a big squeeze. Nah, there's some big buyers stepping in at 70 on Zoom. Yeah, something's going on. Could just be Kathy Wood talking about it. I don't see anything big with Zoom. Zoom has some meat on the bone. Yep, just took a put before close already, up 300. Dante Carter ETH, congrats. SPY oversold on high time frame, yeah. Higher time frame. Watching that 75 break. Yeah, 75 is going to be big. I'm watching Zoom too. I want to see a real solid catalyst to add more size to Zoom. It's either Zoom or Tesla for me right now. But that was a nice move by Zoom. Diving a little back. And ETH, what is your name? Something ETH, I think you said. Dante Carter ETH. .ETH. Are you crypto guy? You bullish on crypto? Carbides, yep. Yeah, man. That's what I'm thinking is I think the market just went up. It got a little excited. Maybe there's some shorts. I think it was a squeeze. If you look at those candles on Thursday before Jackson Hole meeting, before the big Fed meeting, if you look at those candles, right? As soon as we got above that big candle, boom, SPY just took off. So whoever was buying, you get people stopping out, artificial buying, traders come in. Now we need to ease back to that level and see if it's a real, it's a real level to mess with, in my view. But anyways, yeah, taking a look at Zoom, I think this thing can really run strong, just given the macro narratives around communication, AI, blah, 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 increasing productivity. And they got some really, they're really negative just because they had so much growth during the pandemic, just like Amazon. It's the same story. They grew so fast that all the numbers look terrible because, we don't need Zoom the way we did. We don't need, people aren't buying goods the way they did on Amazon, but that doesn't take away from how powerful or how strong the catalyst is for the actual company, right? So looking at this break here, that downside break, this might be the real break here for Zoom. You get, it's really 75, man. Big man's coming. I think 75 needs to be it. I think 75 is that level. If I look at the weekly, I mean, look at that upside. Do we get there? Probably not this year. Probably not next year. You never know if the Fed does end up cutting rates and get, next year, because inflation goes negative, which people are not expecting. And it could go negative if productivity really starts to pick up. It's going to come down to that fiscal stimulus that comes into the economy. Everybody thinks it's inflationary, but the way it actually works is if that stimulus actually creates more productivity, then inflation actually comes down and the economy still expands with it. So how they implement the Inflation Reduction Act, the CHIPS Act, and the infrastructure bill, how they implement it is going to be important, right? And that's the biggest political drag on the economy. Everybody wants to cut rates. Everybody wants a strong economy. Everybody complains about the debt, but it's really about how you use that capital, right? If somebody gave you $100 million or $1 million, and you go buy cars and houses, well, or you start a business, that's gonna determine what happens to you in the next month or two. It's what are you doing with that capital? Is it gonna create more capital? Or are do you buy a business that is the wrong choice, right? If you invest in something like, what do? We invested in infrastructure for renewable energy, but we messed up in the US because we stopped drilling fossil fuels, which we need to keep doing that to keep the energy prices lower. Because then, okay, you invest in infrastructure for, green energy, which renewables, which we're all for. But if the price of energy goes up, well, then you're crushing the economy too. So it's how you implement that fiscal policy. I think that's going to make the biggest difference. And unfortunately, we don't have business people in the White House. We don't really have businessmen in the White House, or entrepreneurs, as I would say. We need some more entrepreneurs in the White House and in the government to learn how to spend the money, not just give it away. If we just keep giving away government stimulus, well, people are not productive. They just spend it and, they use credit cards, and you don't really have much productivity going on. So if anything, we need productivity in the US for that fiscal policy coming online. Okay, so yeah, the SWIFT, while we're looking there, what's going on with SWIFT? Unlocks potential of tokenization with successful blockchain experiments. If there's one thing that I'm taking a big risk on, okay, it is this tokenization world. And I think this is really going to happen. You guys might hear me talk about it every once in a while, but SWIFT is the biggest payments messaging system on earth, and they're experimenting with Chainlink. So I think that makes the biggest move higher. I'm trying to get this content on here so when it goes up a lot, everybody's like, oh my God, that guy talked about it, right? And then you guys can buy my content. Because we're all here to make money, right? I'm here to make you guys make more money, and I'm here to learn as much as I can off you guys. Some of you guys are smarter than me, by the way. I'm just here to report, right? But anyways, yeah, that's what I think. I think there's a lot of good opportunities in this bear market, and people are told that, oh, this is terrible. This is when you invest. Honestly, this is when you invest. You just got to pick the right vehicles. So carbides, I think we're also going to need to refill our oil reserves at one point and increase demand all while prices are rising. Yes, that is a risk to the economy that we refill the SPR while demand comes back online. Here's the question though. it's all about demand and supply dynamics, right? So if we supply more, if the world actually starts producing more oil, because we had those cuts, but where do you go from here? Where do we go from here after those cuts? If you start increasing, right? We have 5 nations who are increasing their productivity of oil. If those start increasing, lift 1 hour candle lift off above 75. Heck yeah. If those start increasing, the supply carbides, yeah, you're right. But if supply, which is part of the fiscal stimulus, right? We need increase of supply. We need productivity. And if we get that and the world's doing it at the same time, then oil just goes sideways, right? I think it just goes sideways. Even if we get above 83.50, I don't think it lasts because demand is seasonally weak at this point. Unless OPEC keeps cutting production. The issue is if they keep doing that, if OPEC keeps cutting, well, what they're doing is they're risking market share. They're risking giving away market share there. Leon Lion 175. We are not in a bear market. 100% agree with you, bro. 1 hour candle above 75 liftoff on Zoom. I'll have to check that out. I'm gonna go to that 1 hour. Oops. Man, that was, yeah, it was a pretty sharp move on Zoom. I like that. I like to see that. There's risk coming into the market. There's probably some insider stuff going on. Who knows? I'm not going to go look into it. I just, my thesis is Zoom goes a lot higher. All right. Anyways, back to, because we're looking at these bigger trends. Tesla back to 250. It held the other day, stuck and went a little higher. So what's going on with Swift? Let's throw that on real quick. I wanted to check this out. This is my first time reading this, by the way, too. So if you are interested in blockchain, now remember you have two secular movements here, which is the adoption of the tokenization of like BlackRock, right? Biggest asset manager in the world, Larry Fink, right? Talking about tokenizing the world. And so as that happens, well, what do you have? You have these narratives coming online. There we go. And so you have tokenization coming, and then you have Swift, the biggest messaging payment system. Who's going to benefit from this actually happening? Maybe this is enough. Maybe we don't understand this. Who knows? But anyways, cooperative demonstrates secure and scalable way to connect multiple blockchains for movement of tokenized assets around the world. Swift can provide single point of entry for financial institutions moving tokenized assets while leveraging existing secure infrastructure. Wonder where that's going to come from. Chainlink. Experiments are part of Swift's ongoing work to maintain strong secure interoperability, CCIP, across a fragmented financial ecosystem. Brussels Swift today released a blah, blah, blah. Okay, so that's a lot of stuff. This is just another step forward. Another step forward. I need to, oh, here it is. Chainlink also provide interoperability. It's now clear that both top global. So this is the co-founder of Chainlink. For all you Link Marines out there, if you're out there, I'm gonna have to go through this a little deeper. It's now clear that both the top global banks and leading market infrastructures believe there will be greater adoption of digital assets across the entire banking industry. There we go. Now we can see it. Industry, in that this adoption will happen using multiple different blockchain technologies at the same time. The collaboration between Swift, over 10 of the largest financial institutions, and Chainlink also proved that interoperability across chains is critical to enabling the next stage of digital asset adoption across the global financial system. When combining Swift and CCIP, we are able to show that this new level of interoperability across various blockchains is now possible with minimal resources from even the largest banks and market infrastructure. What does that mean? It means Chainlink's going much higher. BNY Mellon. Yeah, that's my little spiel, though. Of course, I'm, that's one of the cryptos I'm bullish on. See, are they talking about anybody else here? I don't know. What are you guys bullish on, crypto? There was a report the other day that came out and showed that I believe it was North Korea or South Korea, maybe South Korea, They were more bullish on XRP than Ethereum and Bitcoin. I thought that was interesting. But yeah, definitely the altcoin market is near. We're getting closer to the altcoin market, especially with global liquidity picking up too. Oh, that is something I wanted to show. Global liquidity. Even though we did look at a couple things. Let me throw it up here. Global liquidity bounced in August 22nd. And then it started moving higher the 29th. Right into the... Yeah, we'll see if it picks up. So yeah, global liquidity bounced. It's not making new lows. The Fed's balance sheet might be, but not global liquidity. What up, Dimaj? Definitely not in a bear market though. Yep. All right, so taking a step back here also on the weekly chart. ENPH, ENPH might be a really good play. This is a once, I'm just gonna go over this right now. This is a once in a like couple year opportunity. And I'm not so privy with the fundamentals here. It's not like Tesla where I know they're gonna change. I don't know a whole lot about ENPH the way I do Tesla, but I do know it's one of the top stocks. Maybe I should do some more research. But from a technical, you're right, from a technical basis, ENPH is back to where it was back in what is this, May of 2021. So we're going back more than 2 years. Okay, actually this was back where it was in 2020, back in 2020. But the support is in May of 2021. So it's been bouncing at this support at about 120. And when you get 120, right? Or if you take that bottom and then you measure it to the highs, right? It's not like markets don't always go to the highs, but if you measure it out, I mean, you're looking at 100 and what is that? 177% return. Sure, there's things out there that can move a lot, but with options, with long dated options, you can really get some crazy gamma on these type of moves. Right, you really get some crazy gamma here. So yeah, RSI is on the weekly chart. RSI is almost oversold. It can get worse. I'm watching it, but I do see a sell pattern. Very clear. Maybe that's a bad thing. Maybe this is a bad thing, you know, with their business, but that is a clear sell pattern. So I'm looking at 120. I want to see it hold 120 multiple times. And here's your downtrend for ENPH, right? It needs to hold 120 in phase and then start to turn back up. But you can see that the daily RSI is already moving up. So that's pretty bullish for the daily RSI. And that's crazy that the price is moving up, but price is moving down over the past couple days. And the RSI is starting to rebound. So that's a bullish divergence. But again, this is a more riskier asset. So I'm not sure 100%. In the short term, but in the long term, it's definitely going to go back up. For sure, it's going to go back up. Oh, I didn't even notice that. The Qs really, this is, oops. This is a lot of stuff I have on here. The Qs have a lot of, actually the Qs just closed this gap. I mean, it didn't close the gap, but from where it opened on, what was this, the day it gapped down. So the big day that it gapped down, the Qs just filled that and got rejected. So that's called the gap close breakout, but it didn't break out. It actually got rejected. So 379 was that level. I didn't even see that. 379, big level in the Qs, 379. Could even say 379.30. Yeah, 379. That's what I'm seeing here. See that reversal? So where could we come back into? Well, I think it's this big Jackson Hole candle here. So 372, and then all of a sudden everybody's like, I knew it was a bear market, and then boom, we bounce. So we'll see how that plays out. Or we could just burst through. It really depends on those numbers, right? So what are those numbers that we're going to get tomorrow? Actually, what are we looking for? I should be sending out a on my Twitter. I'll send out what I'm looking for tomorrow's numbers. But non-farm payrolls, right? That's a big one. If they come in, their consensus is 170K. Now, non-farm payrolls are basically how many jobs are being added to the U.S. economy. And if you get above those estimates, well, GDP estimates, sort of go up, but so do the expectations of higher for longer core PCE or core inflation. Therefore, interest rates yields will also go higher. They should go higher if this thing breaks expectations. If it comes in line, then I think we're good. I think it's bullish. I think the market's going to be bullish if we come in at 170K. If we come in below that, well, if we come in below that, the market actually the market might be bullish on. I don't know if it's going to be super bullish because you don't want the expectation for payrolls, or you don't want the narrative for a collapse in growth to come in. So I think right on line for payrolls is going to be what we want to see. So maybe a little less, a little more, but right in line at 170K payrolls. I'll have the charts up tomorrow. Unemployment rate. This I don't think matters. We're not going up. You see jobless claims are not really moving. We're not seeing that happen. So unemployment rate, 3.5% is the expectation. Whether we're at 3.4 or 3.6, I don't think it's going to make a big difference. Labor participation, you want this to stick high. I don't know if it goes up, but it should remain sticky. Okay, it should remain sticky. And that is filling the jobs. When you hear job openings, you want participation to go up to fill those job openings, to come down, to bring the labor market into balance. Now, everybody's going to be keeping their eye on average hourly earnings month on month and year over year. That's been sticky. Average hourly earnings are at 4.4%. This is where I think the market's going to react. If the expectation is that average hourly earnings come in on a year-over-year basis at 4.4, which if you annualize it, you're looking at 4.8% inflation, which isn't really great, but it is wages. It's the wages part. It's not goods. It's not services. So even if your wages are higher, I'd say that's a strong economy. When you have wages, at least, I appreciate it. Thanks for the love. When you have wages higher, then wage inflation at least higher than goods inflation and service inflation. That's good. And then people can increase their spending. It doesn't mean they're going to do it, right? A lot of the economy comes down to bad habits. A lot more people have bad habits than good habits when it comes to money and finance. But either way, if your wages are higher, then that's not too bad for the economy, especially for earnings. But again, if it comes in higher than expected, the market could definitely, we probably sell off based on this number. When I say sell off back to QQQ, you could see that blue line somewhere between, if you're looking on the charts, somewhere between what is that 370 and 372, we might sell off Friday into that number if average hourly earnings on a year-over-year basis come in higher than expected. Also on a month over month, if those come in higher than expected, that would be bad also. The rest of it, government payrolls, manufacturing payrolls, those aren't that's not as important. Average weekly hours, I don't think that's a big deal either. It's the wage inflation. It is the wage inflation that becomes an issue, and those are the average hourly earnings, and that is also, I think that's it. Yeah, labor, or if participation comes down, that'll be bad too. But yeah, average hourly earnings, I think, is what the market is really looking at. And then you get the ISM PMI survey. This one's I'm a little more optimistic about. I think it's starting to bottom out. If we look into the report, you see that the most, like if you had to break down economic growth in the U.S., the most leading indicator is the ISM PMI. As far as I know, maybe I could be proven wrong. And within the ISM PMI survey, you're looking at employment, deliveries, production, inventories, orders. There's all these different components. The new orders, which are new orders coming online, that is the most leading indicator. How many new orders are coming into the economy? It's the most forward looking because you're not looking backwards. You're looking forward. Literally, these are supply chain management, or supply chain managers looking into the next month of orders that they're going to need to fill. So this is the most leading economic indicator, right? Those new orders have been up on a month over month basis for like 2 or 3 months in a row. And when this data comes out, it'll be on my newsletter. By the way, go check out the newsletter, go subscribe for free if you want to check out my content. Or in another way, for all the new people on here that are like, who is this guy? Can I trust this guy, right? I'm trying to think of a better way to deliver it. I'm not a marketing guy, but you can read my newsletter if you subscribe. You have a chance to see what I think and kind of how I spin the narrative on the market. And so far we've been right. The market's going higher. I think we're still in a bull market. I think we're going to the highs. And so the ISM PMI is going to be important, right? New orders, new orders have been up for the last 1-2 months. So we've had new orders go up for 2 months in a row. It's going to be a big indicator there. I'm going to be interested to see that. So tomorrow's a big day. Tomorrow is a big day. Another big day. I still think today you had a lot of global stuff. We see that China's not falling apart the way people think. The global economy is turning back up. Some of the charts that I have up here with the global interest rate cycle is starting to flip a little bit. So you're getting interest rates starting to ease around the globe, right? What does that mean? More liquidity, and that's going to be a bid for risk assets. Watch at some point here. I know I don't say a whole lot of crypto news because honestly, the news is two things. Is global liquidity turning up? Are interest rates coming down? And number 3, are we getting the Bitcoin ETF? That's all that you have for crypto. Yes, there might be some individual news, but that doesn't move the price. What moves the price of crypto is global liquidity, right? Global liquidity, the where interest rates are. What is this? Fed Bank Term Funding Program loans ended. Blah blah blah. So BTFP, the Bank Term Funding Program, which is what the Fed did in March when the banks collapsed. That thing is being drained. So at some point, the Fed might actually have to increase liquidity again too. I think it's coming. Somebody asked me, hey, why do you think liquidity is going up? Because the economy is now starting to slow in the US. It's been slowing, but we're getting to the point where rates are very elevated. And one thing you can do is you can keep rates high and then fuel liquidity in the right areas, right? What you want you want to invest liquidity, or you want liquidity to pour into things that produce more. So I think that could be the playbook going forward, which is to fuel productivity and to keep rates high. And keeping rates high isn't necessarily bad. It's bad for bad for debt holders, but it's not bad for savers. Savers actually benefit from this. Savers are yielding. They're going to yield, and obviously savers who make a lot of money, right? If you save $1,000, well, you're not really yielding anything meaningfully, but you are still doing better, right? You're doing better on that. So that's sort of the case here that we're seeing. And man, this is very bullish. I didn't even see that. This is the 9-day EMA crossing above the 21-day EMA for Qs. I think the tech rally is back. As long as we have these rates coming down. I think that's what we're seeing here. All right. Well, any other questions? We're pretty much at the end of the stream. If you guys got any other questions, let me know. Like I said, sign up for the newsletter, link in the description. If you want some one-on-one, you can also sign up for that. That is in my bio. You can do some one-on-one if you're interested. Just check out the prices. If it works for you, it does. If it doesn't, it doesn't, right? If you think I have valuable information, I don't really talk a whole lot about what I'm invested in or try to give financial advice, just more so market commentary and what I think is going to happen. But if you want more insight to what I'm thinking and for me to think through your situation, like what is your personal situation, it's not financial advice. It's just what I would do. It's just how I would see the market. Then you can do that. I've been doing this for a while, and I decided to start making content in 2022. Was it 20? Has it already been a year? 2022, trying to express, I think I want to say I called the bull market in October. I think I first made it. My first video on YouTube was inflation peaked, right? I was like, hey, inflation peaked, so we should be going higher. And I didn't know what I was doing making content. But now we're here. So if you're interested, like I said, to increase your finances, check that out. We have newsletters on fitness increasing your fitness, whatever it is. We do fitness lives on Saturday at now, I guess we're at what, 7 p.m. Eastern time on Saturdays on TikTok live. I'll be doing a podcast on Monday. I don't know when it'll be released, but we're going to try to do some more on the YouTube channel, try to get that up, try to fund that so I can do this, right? I want to be able to do this for a while, keep feeding you guys information. Right now, it is market reports contributing to the bull market because I think we're in a bull market. I don't see that changing anytime soon based on, hey, appreciate it, yo. I don't see that changing anytime soon. But if it does change, guess what? I'm going to start market report number 1. I was thinking about this today. Market report number 1, you know, the bear, I don't want to call it the bear market. Like, what is a bear market? The very top. When I see the indicators, when I see the macro technicals and the fundamentals start to flip, which my guess is going to be sometime in the end of 2024 or 2025 possibly. When I see that start to flip, then I'm going to start my market reports for the bear market, right? For the bear market, for the sell-off, or for a time of maybe sideways consolidation. And so, yeah, stay up to date. Keep up with that information. Other than that, you know, that's all I have for you guys. I hope you guys, you know, get some good sleep tonight. Make sure sleep is always great. That's the best steroid is sleep. Make sure you have a good diet. Stay healthy. Stay strong. Stay healthy. Stay strong. Stay fit. What is something else I wanted to say? Yeah, you know what? It'll be cool when we get the primaries and the voting. I want to hear what you guys are voting on, right? What do you guys vote? I want to hear my crowd a little more, whoever you guys are, who you guys are voting for, and all that stuff. But we'll talk about that later when we get closer to it. Either way, you guys stay blessed, right? Stay blessed always, and I'll catch you tomorrow morning, Friday, right? For the Friday sell-off, I think is gonna happen. I vote for chaos. Ha! Funny. Yeah, hey, we'll see what happens. I vote for chaos. Either way, yeah, you guys stay blessed, man. I'll catch you tomorrow. Come with your questions. I'll be doing the macro report on Saturday, doing a live, going over that, and just keeping you up with the market. So to increase your trades, right? To help with your trades, to help with your investing and whatever it is. And remember this: if you can save just $450 a month, that is no 420. Yeah, 420. You know, 420. If you can save up to 420 a month. Okay. Whoever you are, maybe you're just starting, maybe you're not used to investing, you're new, whatever it is. And this is how I got started. You save up to 450 a month, 420 a month, which is 210 every 2 weeks, right? How much you get, usually people get paid bi-weekly. If you could just save that much in 2 years, you're going to have about $10,000. Now, if you're investing in that $10,000 into the market as you go, right? Hypothetically, you'd have 10,000, but if you're investing that 420 over 2 years, I mean, with my strategy anyways, with my strategies, I think you can outperform the S&P. And I'm going to start that pretty soon here, hopefully maybe in the next month or two, how to beat the S&P 500, right? How to beat. I've beat it for as long as I've been investing. I've been beating the S&P 500. And I've made a lot of big mistakes. I want to share that with it. That's why I hope to do podcasts in the future is I've made a lot of big mistakes. I've learned from them. And want to share that advice. But yeah, hey, it starts with your savings. Invest in yourself so you can invest in others and build your future. Other than that, you guys stay blessed. I'll catch you later. Thank you very much.